businesses have suffered the undue hardship of high inflation. This Fed will deliver price stability. This Fed has the power to do it. We have the tools to do it.
All right, welcome to Arc Salt Lake on your Wednesday morning. Time right now is 7 o'clock. That was new Federal Reserve Chair Kevin Warsh explaining how they can help deliver price stability. Inflation numbers for June, well, they actually dropped to 3.5% due to the drop in oil prices last month when the war with Iran was essentially on pause. It's a pleasant drop, but we know things are still pretty volatile out there. We have conflict again with Iran, strikes ongoing. So here to talk about all of this further is Zions Bank senior economist Robert Spendlove. Thank you for coming in, Robert.
Oh, it's good to be with you.
Okay, so you mentioned in the break that we just saw a soundbite from Kevin Warsh. You watched the whole thing, 3 hours yesterday, right?
Yeah, I'm a Fed nerd.
Well, you have to do it for your job, right? So it's important. What does the June inflation numbers tell us?
Yeah, so, and you have to keep in mind when you look at these numbers, they're the best numbers we have, but they are a few weeks old. So this data was collected, 2 or 3 weeks ago, and it reflected softening of inflation, where we had, and it really is the story with oil and gas, where, at the beginning of the year, oil was around $60 a barrel. Then we had the aggression with Iran start, and oil popped up to $110 a barrel. Since then, we saw oil drop down. We started to have resolution of the hostilities in the region. Oil dropped all the way down to $69 a barrel. So that's what really dropped it. So we saw oil drop. That caused gas prices to go down from about $4.50 a gallon down to about $3.50 to $4 a gallon. We're in a good range, and we saw that where we, for the first time in several years, we actually saw a month-to-month drop in prices. And so that's what we see in the report, and it's a good sign. But then what? And that's the big question.
But then what? I mean, just earlier this morning on our newscast on Channel 2, we were talking about renewed hostilities between Iran and the U.S., both sides trading fresh strikes. So there is a lot of uncertainty here, right?
Yeah, and that's the big struggle is, just in the last week. In the last week, we've had multiple strikes, even overnight. We've had multiple U.S. strikes on Iran retaliating. We've seen the price of oil kind of pop in the last week, going from around 70 to now it's closer to $80 a barrel. We haven't seen gas prices respond entirely yet, but we will. So gas prices are going to go up in the next few weeks. They're going to top $4 a gallon again. And so, the question for Kevin Warsh and for economists is, what is the long-term impact of this on inflation? Can you look through this? Can you just see this as volatility that you don't need to worry about? Or do you need to kind of build this into your expectations for future inflation? You told me that sort of those June numbers are, it's the story of oil. What about the other parts of the economy, like food, housing, any other? Was that really factored in, or are we just focusing on oil? It was factored in, and it was really good. Overall food prices are down. Overall, we call shelter or housing was down. And I should say not down, but slowed. Okay. Services inflation slowed. Used car prices slowed. Really across the board, it was good. One area where we're seeing some price pressure is beef, where ground beef is closing in on $7 a pound. And so we do see some limited hotspots, but it really was a very strong report. And with that oil, it was even lower than we expected. So if we could kind of resolve the conflict in the Middle East, we would have a really good trajectory for inflation. Is it fair to say that until that is resolved, we're just dealing with a lot of uncertainty? I'm sure everyone loves to ask economists, you included, what's going to happen, what's going to happen, what's going to happen? Yep, that's exactly right. And there's so much uncertainty right now. And I'll tell you, the Fed has what's called a dual mandate. They're mandated by Congress to focus on two things, and that is employment and inflation. Those are the two things that matter. Everything else is kind of interesting, but all that really matters is employment and inflation. And so when we look at the employment side of the equation, it's looking pretty good. Unemployment is low, employment growth is doing well, so the Fed is like, okay, we're okay on employment, but inflation is this big question mark, and we just don't know where it's going to go. And Kevin Warsh made a great point where the Fed has a specific inflation target, and it is 2% inflation. So even last month, we're at 3.5%. We've been higher than the Fed's target for 5 years.
Oh.
We've never gotten back down to where inflation should be. And that's the struggle. And I hear it when I talk to people. They're like, well, inflation may not be as bad as it was earlier, but I still don't feel good, and things are still too expensive.
When we talk about inflation, please correct me if I'm wrong, we're talking about year over year, correct?
Inflation is the change in prices, and it can be month over month or it can be year over year. But you're right, the one that most people focus on is that year over year.
Okay, so when you say 3.5%, that's over last year at this time?
Compared to last year, yep.
Okay. When it comes to Utah specifically, Utahns, maybe it isn't that much of a different story than other places in the country, but how are these numbers impacting Utah specifically?
Yeah, and the big difference... So there's kind of the two areas that I really think about with local inflation. Those gas prices and housing. Gas prices in Utah, well, actually I would say both gas prices and housing in Utah are more expensive than the national average. The gas dynamic is really a dynamic with the Rocky Mountains. We're in a western U.S. market, and so our prices are dominated by Los Angeles. And so we tend to just be higher. So we're going to pay higher prices than, say, in Louisiana or Texas or Oklahoma. And so, that's just one of those dynamics in the West. Housing, we're also seeing a real affordability crisis in the state of Utah, where home prices in Utah are much higher than the national average. We're among the most expensive housing markets in the country. And so that does cause that cost of living in Utah to be tougher. Now, there's a reason for it. It's because we have a strong economy. It's because it's a great place to live. We have high quality of life. So they're good problems to have, but they're still problems.
Yeah.
And so, policymakers need to be kind of thinking about this and saying, what can we do to try to help address this affordability struggles?
We have about a minute and a half left. You mentioned policymakers, so I do want to ask you about Warsh. He's new to the job, obviously. How's he doing? Is he inspiring confidence in economists? Give me your take.
So he's brand new. He's only been in for 6 weeks. Yesterday was the first time he's testified to Congress. He only has one meeting of the Fed under his belt. The big question is, the president wants the Fed to cut interest rates. Yeah. And you can only cut interest rates if inflation is slowing. And and so Warsh is going to be facing this really difficult situation very soon about should the Fed increase or decrease interest rates. And so he's really going to be tested. Over the next several months, he's going to be tested. He said, we have the tools to address inflation, and he's right, but that tool is interest rates. And is he going to be able to get that inflation under control? How much leeway is he going to have? These are all the questions that we're all going to be paying really close attention to.
He's got a tough job.
He's got a
the
really
Fed chair always has a tough job, right?
Yep. And to the president's credit, he's been very deferential to Kevin Warsh so far. If you remember back with Jerome Powell, the president was hammering on him all the time. And so far, he's been deferential to Warsh, and he's given Warsh kind of the leeway to do his job. But the question is, how long is he going to be giving him that leeway?
But overall, the June numbers, even if it was sort of a blip, it's still good news, right?
It's great report. Yeah. Really good report. Not only lower, but better than we expected. And then this morning, so that was consumer prices. We just got producer prices this morning. They also came in really strong. So 2 reports in a row of really strong data. Now that what we need to continue to see these reports coming in strong to give the Fed the tools to be able to cut rates.
Okay. Robert Spenlove, thank you for coming in, senior economist with Zions Bank. We appreciate you giving us your insight. It can be complicated for a lot of people, so we appreciate you kind of analyzing it for us.
Sure. I'm glad to help.
All right. Thanks for coming in.